Hello and welcome. I'm Anna, and this is a new episode of Proyecto Co, a channel that explores ideas, methods, and mental models that will help you expand your knowledge around social innovation, develop your potential, and master the best of what experts and entrepreneurs have already learned. We have become accustomed to a banking system that is not working. Today, we talk to Els Ankum-Griffioen, Institutional Investor Relations Manager at Triodos Bank. Els explains why the current banking system is not working, how value-based banking uses capital to create a more just and sustainable society, and much more. Els, welcome to Proyecto Co. It's a big pleasure to have you on board.
Thank you so much, Anna, for having me.
I was wondering, what do you think are the core problems you see in the global financial sector?
Let me be really honest and tell you that many of society's problems actually come from choices that are made only in self-interest and for the short term. And this creates not only financial, but also non-financial risks. However, somehow we have come to think that this is normal in the traditional industry. This is a huge problem that is there. What you also see is that the system is kept in place because a lot of traditional banks consider that this is the normal way they want to do business, and they don't want to change it very much because that's cumbersome, a risk in themselves, they think. But what we see is that if you do business the way you keep doing it, there is a huge group of people, literally 1 in 5 people in the world, who do not have access to financial services in the world. And that's a huge problem in the global financial sector. What we see is if there are so many people who do not have a bank account, they have a chain reaction of things that hold them back in their own reaching of their own potential. So for instance, in our world, how normal is it that you do online banking, online orders? If you don't have a bank account because you are not allowed to open one, then you cannot make simple electronic payments. There is a problem with identification. You can't borrow money to finance your company, even if that's a good company. And so these people cannot fix their own lives. And we see it very differently. We see if you give these people a bank account, if you allow them to participate in the financial system, it's business opportunity. And we see this as a tool. It brings a stronger local community. It brings stronger local economic resilience. So if you give loans in areas that they weren't before, you create jobs. And if you do this with sound business principles, values-based, you're bringing positive change, and this helps all of us. So for us, if you're asking what are the core problems we see in the global financial sector, I think that not enough people see banking or finance as a utility. It should, in our opinion, serve the real economy. So I think that's possible. I work, of course, for a values-based bank. And a values-based bank is different in the sense that we believe that a banking system should support economic resilience. It should be transparent, and it should do this with regard for social and environmental sustainability. So that's where we're different. And we're showing that it works in a group of banks that are like-minded. We actually work in an alliance of progressive values-based banks. We started in Holland and then expanded with a bank in the US and a bank in Bangladesh and a bank in Denmark. And now there's 66 of us, all our own institutions nudging the banking sector to a more sustainable direction, to a more values-based banking. And it works. We're showing that it's more green, it's more resilient, and more just. And that helps.
That's fantastic, Els. Congratulations so much. I really admire Triodos Bank. Actually, our account at Efecto Colibrí is in Triodos Bank.
Thank you so much. Yes, we are in Spain indeed also. Yes, thank you. Yeah.
I was wondering, when we talk about the way of functioning of the general banks, the status quo, what do they do with our money when we have our bank account there? What can we expect them to do with our money?
There is let me give a very broad takeaway without naming names. But basically, if you look in the ordinary banking system, as we see it all around us, about 3/4 of the money that banks have in their reach is used for interbank loans. So banks finance each other, and this is, of course, the split second work. But what you should see there is that the money does not, how do you say, touch the ground. It is not used to finance real businesses. Instead, it is used to maintain a system of large banks working together. And this is all regulated. It's all done within the context of the law, or it seems so. But you could also do banking very differently. So while we as Triodos and as value-based banks in general are regulated by those same financial supervisors as other banks, what you see is that we have a different intention, and the intention is to use finance as a source for good. And so as a bank, we've chosen to only finance companies, entrepreneurs dedicated to contributing a positive change in society through their products and through how they work, through their practices. And in our investments, we only invest to achieve a positive impact, so better quality of life in whichever way it can be achieved. And of course, all the themes that we have selected to represent or to specialize in are actually interconnected. Let me explain which those are. These 3 topics are the ones that we do not only as the bank, but also in the investments that we do through Triodos Investment Management. Our themes are social and financial inclusion, renewable energy and climate resilience, and sustainable food and agriculture. And in that sense, maybe we're very different from other banks, yes. So maybe it helps if I give you some examples, Anna?
Yes, and I was also wondering, Els, how did you manage to make it sustainable? No, because generally we think, okay, business as usual is much more profitable than this kind of lines that you have just mentioned. No, it's interesting. Could you please help us break through our biases?
That's a very, very good question, because actually there is so much bias. It's really funny. We see that values-based banking is as profitable as conventional banking, but that we as sustainable banks are somehow more careful, because when you are so alert for the social, the environmental, and the governance influences that prospective investee has in itself, then you actually start looking for clues. And when you're doing that, you are more careful. So what we see now in our books compared to conventional banks is that we have better solvency ratios, and more of our balance sheet is working for the real economy. And we're showing that there is no inferior banking business model in values-based. It's a matter of choice, it's a matter of topics, and it's a way of working. But you are under the same regulator, so the terms and conditions are almost the same. You just choose to finance different things. And the way you finance, this is a key, determines the world you will live in.
It's so important. Your work is so important, Els. Now let's go to the examples.
Yes. Of course, when you say that you want to make a positive change, you can't just say it. You need to prove it. You need to keep the numbers, and it needs to be comparable, right? So just to give you a few of those numbers in that context, if you look at the direct loans that we gave to companies through our investment funds, last year, they provided 267,000 households with clean energy. And by the choices we made, we avoided in 2020 288,000 tons of CO2 emissions, mainly by, of course, creating the alternative renewable energy projects. But sustainability is also related, of course, to food and to food production. We supported 36,000 small-scale farmers, and very importantly, ensured that they were paid quickly and fairly as soon as they delivered their harvest. In our loans to entrepreneurs worldwide, we cast a wide net and reached 18.2 million microfinance borrowers. 3/4 of those are women. And of course, you know that the United Nations says that when you address the women and you address the farmers, you are addressing the poverty. So you're helping to resolve that, because these women can now expand their businesses and improve their lives. So we're making waves where it counts, and also accelerating energy transition, bolstering the food transition, and contributing to an inclusive society. You can do this through direct loans, but you can also do it in the listed space. And if you make conscious choices there to also only look for the sustainable transition in the companies that you invest in, we, for instance, have a pioneer fund which invests in pioneering small and medium-sized companies listed on the stock exchange. What you see here is that 3/4 less greenhouse gas emissions compared to when you would not screen for all this careful selection. And these companies generated about half less landfill waste and used about 28% less water than companies that, if you don't pay attention to these factors. So, as said, you can make choices, and those choices help to build the world you want to live in. And we see these choices, these investments, contributing to actually achieving what the United Nations defined in their Sustainable Development Goals. We think that it is possible to contribute to an inclusive, green, and resilient economy. So this is what we see. But of course, just wanting to bring positive change is not enough. Anna, I must emphasize sustainability. Whatever you try to do has to have a good business model, or it's not sustainable business.
I'm thinking now, I'm putting myself into the shoes of a farmer, of a woman entrepreneur, of a social entrepreneur. Which are the vehicles that you have at Triodos so that we can make it easier for these different groups to have a slight overview, a panorama of what they can do with Triodos, no?
Let me break that down for you. If you are an entrepreneur and you're in Europe, you come to one of our offices and we'll discuss your business plan. But when it's further away, when we don't have an office, you need to work with partners. And there is actually one group of things that came together because a lot of the topics are interconnected, right? And many, many years ago, the term microfinance was discovered. And this means that people can take a small loan and pay that back. Now, it's not efficient for us to give one-by-one loans to individual farmers or to individual women entrepreneurs. That's just too far away, and there's no, you need to arrange that in a different way. So the way that we work is we work in a network of about 100 microfinance institutions. These are regulated institutions. It looks like a bank or a credit cooperative. So it's something that is supervised in their own country. And what we do is we provide a loan or take an equity stake in such an organization. And what we then do is we network it. So we actually share best practices between the investee companies in our, for instance, microfinance fund. So what you see is that we do a lot of exchange of knowledge. We share best practices. How do you do this in Peru? How do you actually do this in Kyrgyzstan? How do you actually do this in Mali? And then, you can share best practices. And just because it sounds far away, of course, I'm happy to share that when you are able to do a technology jump like we are doing now, this is the way that you work it. So we're providing loans through these microfinance institutions to 1.7 billion people worldwide addressing their problems. We don't provide to all those. That's the number of people who don't have access to basic financial services and products. And the interesting thing is that most of the small and medium-sized enterprises in the world do not have access. They cannot get a bank loan. They are not served by the traditional banking. This means that they cannot create their own jobs. And that's a problem because nobody else is going to do it. So this is the area that we're jumping in. And those microfinance institutions, they get off the beaten track. They seriously are usually aimed at rural. They are very often aimed at women. And they are also, I mean, it's not exclusive. They are sometimes also looking at the urban people who are not allowed into the financial system. So it's really, we use the word inclusion, but it's actually a reaction to the word that they're shut out. There's exclusion first. And what we see is if you give a loan to someone and he pays you back within the time that you agreed and with the amount that you agreed, that's business, right? Why should you say that you don't do that? So this is what we're doing. And the microfinance institutions are growing and maturing and they're doing quite well. So we're working through them and the loans we provide to them are repaid.
I really think that this ecosystemic approach is key, no? We're seeing more and more how the SDG 17 is becoming more stronger.
Yeah, you're so right, because is it the partnership or is it the local stability that you create? Is it peace that you create when people finally have the job and have their self-worth, their dignity in place? I think there's such a huge chain reaction that is defined by what happens when people are able to take care of themselves. So we think that this is really, really important. And I think financial inclusion is instrumental in giving people access to basic needs, nutritious food, housing, education, energy, you name it. I actually think that microfinance is a Sustainable Development Goals supercarrier because it's a vehicle that can work for all these topics. And the access to these needs is urgent. And it's everywhere, actually, because don't think that this is only in faraway countries. This is also nearby.
Could we go deeper into this and talk about the different regions and the challenges that you see within the realm of financial inclusion?
Sure, happy to do so, because you're right. We work in, for instance, in the Triodos Microfinance Fund, we work in 45 countries with about 100 institutions, as mentioned. This is about social and financial inclusion. As said, 70% of our clients are in rural areas, and through our investments, we work in the financial sector in emerging and frontier markets. This is in Asia, in Africa, in Eastern Europe, in Latin America, and there are 3 main areas. So we work through those microfinance institutions that I mentioned to you. This is about working capital for your company, or this is a bridge finance loan when your harvest is not yet ready to harvest and to be paid for, but you do have to pay for your school fees, for instance. There is micro insurance, or there is micro leasing when you need a hand tractor or something like that. So this is all there. And there is a really important thing, and that is safe savings accounts. So trustworthiness is at the key. The second thing, simply said, solutions create demand. So entrepreneurs jump into the space of, hey, I can buy solar panels and then I can rent out my electricity so that people can charge their mobile phones. It's sometimes as simple as that. But we're also talking larger when you talk about an entrepreneur who, for instance, creates affordable housing or education. And fintech is the big game changer here, because fintech, and proven even further by the corona lockdowns and everything, this enables so much more inclusion. Mobile phones are a huge benefit here, so you jump the technology gap, and they have certainly proved valuable in many of our investments already. In for instance, would you like me to give you some examples?
Yes, please.
So in Indonesia, for instance, as you know, a big country in Southeast Asia, 2/3 of the 56 million small and medium-sized enterprises in Indonesia do not have any form of formal financial service. And what happens is we invested in a company called CoinWorks. This is a peer-to-peer lending company, so it's a fintech company, and it actually notices, it has seen double-digit growth in the past year while maintaining the quality of their loan portfolio, because they were able to provide digital services, so fintech loans and repayment systems, because of Corona. So people had to adapt to this technology. And it's really key because technology helps you improve the quality, the access, and the affordability. for hundreds and hundreds of entrepreneurs, in their case, many thousands. Here you see fintech working during lockdown because, of course, people still need food, right? People still need transport. People still need stuff, even though they're in lockdown. So the economy goes on. And this is one way of keeping people connected. A totally different example that maybe you would like to hear about where you can see microfinance working is, again, a grassroots initiative. This is an example from India, where you literally see a taxi driver who sells his taxi and starts hiring teachers. He set up a public school because the ordinary schools were so overcrowded. They were so overcrowded that kids couldn't hear properly what was being said, and it was just too crowded. So what they did is they started a company called Vartana, and Vartana offers loan capital right now to already 3,000 affordable private primary schools, teaching the teachers, and already touching the lives of 2.5 million children. So this rolls. When it rolls, everybody understands. You remember that I said that a solution creates demand. And these are just two examples of the many, many that we have in Asia. But I remember that you wanted me to say something about Europe as well, right?
Yes, it would be great if we could see different examples in different regions so that we can have an idea, no, to the extension of your work.
Yeah, because you know that, of course, we're a bank based in Holland. We also have a strong base in Spain. We're in Belgium, in Germany, in the UK. But let me give you something totally different, because that's where we have offices, but we work internationally, of course. So an example in Europe is in Serbia. We provided a loan to Opportunity Bank in Serbia. What they want to do as a bank is to stop people moving away from the countryside and moving to the cities where there's actually where life is difficult. So already before COVID, Serbia already had one of the highest rates of poverty in Europe. A lot of Serbs lost their savings during the war, which was just 20 years ago, and they never recovered financially. So what we do now with Opportunity Bank in Serbia, their staff go from village to village, literally helping people change their own life. What they do is they get a small business loan, and we're talking 2,000 euros maybe. And they help entrepreneurs start a business. Think maybe farming pigs, or think maybe starting a building company. And this helps the community because what they do gives new hope for unemployed people in rural areas. And while most banks, most ordinary banks, ignore the small loans and ignore faraway villages, OBS exactly lends to these small-scale farmers and entrepreneurs, educates them financially. That's a condition in microfinance, that you give business education, financial education to the end user of the loan, because you need to pull them up, remember? And you focus entirely on this inclusion. So right now you're looking at OBS being the fastest growing bank in the country. Almost half of the clients are women, and 3/4 of their clients live in rural areas. So why can you grow fast? Why is it a good investment? Because other people aren't there. So this is a region, this is a story that repeats itself. The pattern is you go to places where it's not crowded. This is just good business sense, right? But for the receivers of the loan, it's, I live here. My family has always lived here. We need to be here. We can't afford to move for all kinds of family reasons, or because it's where you feel most happy, but you're stuck. You know, all these things, it works. Shall I go to Latin America?
Yes, let's go to Latin America and then to Africa.
Let's start in Mexico. Of course, a very large country. And it is the largest fintech market in Latin America. The companies were helped by Mexican consumer protection laws, which are now working. So the fintech companies provide services like payments on remittances. There are, of course, a lot of people working abroad, and they send money to their families in Mexico. That needs to be safe. There's personal financial management. You save your mortgage, all these things, your business loan. All this is done through fintech. But just for an idea, I think it's really shocking that there are 4.5 million small companies in Mexico, people creating their own livelihood and helping their neighbors by providing jobs. But only 10% of these people can get working capital. The rest is excluded from the financial system. They're seen as a risk. They're too difficult. And so what we see is an unserved community, but also an untapped opportunity. And so we financed a company called Bien para Bien. And this company is a fintech that gives loans to entrepreneurs. They're asset-backed secured loans of 10,000 to 250,000. These loans are bigger than the ones that you saw in Serbia. Very often we show the difference that sometimes you are helping one entrepreneur. Sometimes with a larger amounts, you're actually helping with working capital. They need to buy machines, so the loans are larger in size. So it really depends on who the market is. But you're showing here that a typical Bien para Bien client will employ about 20 people. So that's supporting 20 families. So you see the immediate ripple effect when you start giving loans to people who didn't get them in the first place. So we're seeing that this is helping. You see a same example with an unusual player, Banco Agrícola. This is in El Salvador. And this is funny because they are one of the largest and leading banks. They used to be a traditional bank. They have started moving into the SME finance space. So small and medium-sized entrepreneurs are now being financed by them. And interestingly, 60% of the country could not get a business loan before, but almost 100% of the companies in El Salvador are small. Mm-hmm. So you're talking a huge potential here. It's a smaller country, of course, but from a percentage point of view, it's huge. The urgency is clear, and so is the business case. And Banco Agrícola, very importantly, supports especially women entrepreneurs and local products. So think the local bakery, but also think natural food and drinks and cosmetics and even accessories. So things made for tourism, this is all there. So that's how that works.
Do you see any parallels, for instance, with examples in other regions of Latin America or in Africa? Could we export this kind of solutions that we see in Mexico or in El Salvador to Kenya or to South Africa?
Yeah, and very often it's actually the other way around as well. So there is a lot of interaction. The common denominators are you a rural country or are you more, do you have more cities? And where are the people who need this? The common denominator is also, is there employment other than tourism in your country? And how does that work? And the seasons, of course. Are you in the tropics or are we talking Central Asia where it gets really cold, the former Soviet republics? So these are all different, but there are many, many comparisons. One comparison is an easy one. That's the use of the mobile phone. The use of the mobile phone has been a huge game changer over the past 7 or 8 years, whereby you can use your mobile phone subscription. For instance, the way M-Kopa is doing this in East Africa, whereby they use your mobile phone bill to purchase solar panels. And you need to make your payments, which is really easy through your mobile phone. But if you don't pay, then they can shut down the solar panel until you do pay. So, there is technological stories, but let me give you a good one from Uganda, a different one, totally different, also mobile phones. So we invested in Centenary Bank, which is one of the large banks, a pillar bank now in Uganda, which is one of the fastest growing African economies. You're talking 120 million people plus, but many, many of them still live in poverty and don't have access to the basic financial services. And what Centenary Bank does is they have started something called group savings. Group savings is, of course, something that's done in many, many countries in microfinance, but they have a special way of doing it. They have 3 kinds of savings accounts. One is for friends in need, who just need it quickly and will pay it back really quickly, no interest rates. The other one is for school fees when you need planning, because remember the example of your harvest is not yet there, but you do have to pay your school fees, so it's kind of bridging. Mm-hmm. And the other one is whereby you can take a loan from each other with low interest rates. What Centenary also does is offer mobile banking by phone. And this, in a country with huge distances, is really effective, because normally you had to walk like 5 hours to pay your school fees, and now you just do it in a few minutes. And to finish the story of Mkopa Solar, the East Africa Solar Company, that is, of course, again, very important, because when you have electricity, you can charge your mobile phone. And this story that they started, we've copied that in several countries, or encouraged entrepreneurs to copy that in several countries, whereby already now they're reaching over 700,000 households. So it's moving, it's fast. And immediately, I remember a CEO conference of the various sustainable banks. They got together and they were literally sharing best practices. Can you do this? Is this seen by the regulator of the phone industry as something they will accept? Well, in some countries they do, in some they don't. And then they actually started helping each other. How do you do it then? One really important thing is social inclusion and helping people, trusting them by giving them a loan and expecting to be paid back, is not something that is restricted to only faraway countries or only developing countries, because what we used to call developing is often more modern than we are, and the other way around. The big countries that we all come to respect actually have pockets where it's really bad. So, for instance, one of the things we also see is that big banks in the United States are abandoning rural America, focusing on the cities instead, and leaving communities behind. And the distances are huge, leaving communities behind without adequate access to capital. So we financed Southern Bancorp. This is just to give you an example of that. It's necessary there too. Southern Bancorp is the largest community bank in the US. It works in Arkansas and Mississippi, and this region is amongst the poorest of the country. So 28% of the population there lives below the poverty line. And if there are no banking services, you cannot get a mortgage, you do not get a business loan, and you're the only one there. So Southern Bancorp has jumped into this, started several years ago already, filling the gap now for 65,000 customers. And this is an example of how you revitalize your economy by bringing financial services. And this story is true everywhere. So it's not just in small or in faraway countries, it's everywhere. And this is something that I'd like to encourage as a basic principle of values-based banking. You need to help the local societies be resilient. You need to support people in attaining affordable housing. You need to support jobs by facilitating entrepreneurship with capital and with capacity. You need to empower people to save. And then the creativity of people will amaze you.
Els, thank you so much for sharing with us. This has been really inspiring and really useful.
Thank you so much, Anna, for having us. And always welcome to come back. We're on triodos.com or triodosim.com if you're looking for the investments. And happy to share. We have lots of stories and numbers for you to browse. And I hope you're inspired.
Thank you, Els.
Thank you so much, Anna.
This is Proyecto Co, a channel of collaboration and co-creation for social good.